Hello everyone, my name is Thomas Sorbo. I'm the co-founder of Xeneta, and I will be your host for the next 30 minutes. I'm thrilled to introduce Rolf Haben-Jansen, the CEO of Hapag Lloyd. Rolf will present Hapag Lloyd's view on the world trade and the future of container shipping. After the presentation, I will ask Rolf some of the questions you have submitted to us. And by the way, thank you so much for all the interesting questions. Rolf, now over to you.
Thank you, Thomas, and also thank you very much for the invitation and for everyone for taking the effort to attend. You gave us a quite broad topic, but let me try and give you a quick introduction. Maybe then we can have a bit of dialogue after that. As you said, the question was rather broad and say something around world trade and the future of container shipping. We could probably talk about that for hours, but let me try and keep it short. Maybe start with this year. Yeah. If we look at container transportation, we've certainly been affected significantly this year by what happened in the context of COVID-19. I would say though that the industry has probably been much more resilient than many people expected, and also when we look ahead, I would say it's fair to say that the industry will likely remain a growth industry, even if we're probably not going to grow much faster than global GDP. But whereas at some point in time people predicted that container volumes would be down for the entire year 10, 11, 12, 13, 14%. I think the latest forecasts are, as you can see here on the chart, about -4. Yeah? And I would not be surprised if in the end it's even going to be a little bit less, and then we'll probably see a further recovery in the course of 2021. Yeah? All in all, I think it's been an interesting year, but certainly also one where the recovery was probably a lot quicker than many people expected. If we look at the fundamentals of the industry, and also trying to say what's going to happen in the upcoming couple of years, I believe it's always good to look at what's going to happen with the supply as well. Yeah? Because on the one hand, we talked about demand, which is expected to recover. If we look at the order book, it's at an historic low of 8% of the global fleet, with very few orders being placed actually over the last 4 or 5 years. And also when we look at idle fleet today, I mean, we are down to 2%. I saw this morning that the numbers came again, another 125,000 TEUs down, which means that effectively pretty much everything is being deployed as we speak. Of course, also on a fairly strong rebound of demand. But that also means that when you look ahead, the likelihood that a lot of supply will come over the upcoming couple of years is not very high, which means that the market will most, because even if you would want to order ships today, you will probably not be able to 23 or so at the earliest. Looking a little bit at the challenges ahead, some of them are definitely there to stay. Yeah. One of them that we always point out, and which is in 2020, here we see just 2 examples of the Trans-Pacific, where it's about 60 back. Then we have 4 boxes from Asia to North America, and on the transatlantic we see a similar picture, though admittedly there the imbalance is a little bit smaller. But the big challenge in 2020 has been that these imbalances have been fluctuating a lot, you know, on the back of lockdowns that there have been in various parts of the world. Initially in Asia, later on in Europe, and then we have also seen, of course, some big things happening in India and later on in America. And it's a tremendous effort and also a challenge for everybody to get the boxes back to where the reasons why today we see some container shortages here. When we look not at imbalances, but when we look at ships, we can also see that ships have become a lot bigger over the last 15 years. Actually, they have grown much faster than trade has grown. And that's probably something that was needed because bigger ships just have a much lower unit cost. But looking at that trend, we do not think that that's going to continue for much longer, also because the incremental benefits of going from 24,000 TEUs to 25 or 26,000 TEUs are just not that significant. Whereas, of course, making the jump from 6,000 to 7,000 TEUs to 13 and then to 20 was very big. But I think we're starting to reach a little bit the end of that, and also because trade is not growing all that fast anymore, but just a couple of percentage points this year, one would not expect that we're going to see much bigger ships in the years to come. When we take another view at the industry and look at the structure of the industry, then that has of course changed dramatically when you look at the last 6 or 7 years. On this chart, you see an overview of the consolidation process, and we compare that 2013 to 2020. And there, of course, you see that, from going roughly 20 players that have been active globally, that we are now down to 5, 6, 7, that truly matter on a global scale, and then a couple of smaller players that are predominantly active on one or the other trade. And that has certainly changed the structure of the industry and will definitely also bring some more stability. It was also needed because if you look at the period before 2013, nobody was making any money, and let alone earning back their cost of capital. And whilst that has not improved a whole lot when you look back at the last 5 years, I think looking ahead, that we can be cautiously optimistic that the industry structure will be a little bit more healthy. Other changes that we have seen, a few more to mention before I wrap it up. One around customer solutions, where we see more and more digital transformation, where we do leverage modern technology. We've seen a lot of instant quoting. We see better visibility tools. We see better tracking devices. We see collaboration platforms coming up. I do think that that's going to continue, and it's probably going to accelerate further if we look ahead in the next 5 or 10 years. And there is going to be more and more focus on making sure that the service that we provide to our customers is going to be more smooth, but also the experience is going to become more and more digital. The discussion on ships without people, I personally don't see that. If you look at the overall cost of a ship to sail it from A to B, and then you look at the small fraction that labor cost actually makes in all of that, and you look at the sheer complexity to automate that, then I think it's pretty clear that the payback of that is going to be very small, let alone all the risks that you take, looking at insurance but also cyber risk, for example. So we don't see any self-driving ships in our industry coming within the next 1 or 2 decades. Then environment, in a way, I would say that 2020 has actually been quite a good year for shipping from that perspective, because IMO 2020 has definitely helped the industry to become greener, but it's also clear that we'll need to do much more to further reduce emissions in the years to come. And here we try to illustrate a couple of things that are being done today and which will come in the future. On the one hand, today the options in reality are 3. Either you use LNG, or you put on a scrubber, or you use compliant fuels. And then, of course, in the future, there's a lot more things that are being talked about, and I mentioned some of them here. And when you look at the technology that we have available today, then the most promising one from our perspective is still LNG, also because those engines over time should be able to also use synthetic LNG or other forms of gas-based fuels that are produced in a carbon neutral way. Probably interesting in that context to highlight briefly the project that we are doing right now, which is I think we're the first ones that are now converting one of our big ships to LNG. It's been a very interesting and exciting project. We've been working on it for 1.5 years, to be honest, and you see some pictures here about the tank that is being installed. We are exploring whether we can do more of that, but admittedly we have to say that this is going to be economically quite challenging, as the retrofit of this ship costs us about $35 million, and unless we are able to bring that down to say $25 million or so a ship, then it's going to be economically not feasible to do more of them. If we can bring the cost down in one way, shape or form, we will seriously look at converting another couple of ships up to a maximum of about 16. If you look, of course, what the effect is of LNG, it definitely has the potential to reduce CO2 emissions by, we would estimate, 20 to 30%. But of course, also sulfur dioxide and particulate matter emissions are going down very significantly and are in fact almost disappearing. Probably that has less focus, but I'd say that that's certainly something to keep in mind as well. Then finally, these days, what is any presentation without anything on COVID-19? I would say, what are our takeaways at this point in time? We think that globalization is still intact, even if it will certainly change. How that remains to be seen. Some goods will certainly be sourced a little bit more regionally. On the other hand, we see that the world is just very, very interconnected, and you just need to look at what's happening on the Trans-Pacific eastbound trade these days to understand that these things are not so easy to change. We do think there's going to be less single sourcing. People have seen, of course, the dependency one can have on one market or one or two manufacturers, and we certainly expect people to be more diverse, which will make supply chains potentially a little bit more complex. Yeah. We also think that some people will choose to hold a little bit more inventory. We have seen that even if the industry, in my view, has done a good job in keeping supply chains flowing, that disruptions quite quickly can cause fairly significant issues, and certainly with today's cost of capital, having a little bit more stock is probably not that bad an idea. And then finally, I'd point out the point on the seamen. Yeah. Our seamen have in many cases been aboard the ships for much, much longer than originally anticipated, and we're doing our utmost to try and get every one of them home. But this is very tough, and these people are very, very essential to keep our supply chains functioning. And sometimes I don't think they, on the one hand, maybe get the credit that they deserve. On the other hand, we could still do more between all parties to enable them to go home also after they have served on the ships for quite a few months. So that as an introduction from my side, and with that, Thomas, I'll be happy to hand it back over to you, as I'm sure that you may have a couple of points that you may want to raise as well.
Yeah, thank you so much, Rolf, for the good presentation. We asked our customers a couple of weeks ago to submit questions for our session. So I've prepared a couple of them that I'd like to go through with you. Let's just jump straight at it. Number one is, what takeaways are there from the COVID crisis for shipping lines? And do you foresee structural changes in the liner shipping industry as a result?
I think one of the key takeaways is that that we have to be quick on our feet. Yeah, I've been surprised about how quick we were able to react. I mean, once the crisis really kicked in March, and we saw that about 20% of our revenue was going to break away in the month of April, it was very clear that we needed to take out cost. Yeah, and we were able to restructure about 50 of our 110 services around the globe within weeks. Yeah, normally we would take years to do that. Yeah, but now we were able to do it in weeks. So that's probably the biggest takeaway. And of course we had to do that, because if all of a sudden from one month to the other you miss $200 million of revenue, you have to take out cost. Yeah, you simply have no other option. And I think we've also been fairly good in bringing that capacity back if and when demand came back again. As you can see today on many trades, capacity that's being deployed is actually more than it was before the crisis.
Good, thank you. 2021 is fast approaching, and a lot of shippers are now preparing for their tenders. What are your predictions for next year in terms of rates, volumes, and carrier performance?
I mean, it's very difficult to say that. I mean, it's probably always the most difficult question one gets. I try to look usually a little bit more out and look at supply and demand, because it's possible to say something about what's going to happen in the next couple of years, not so much about what's going to happen next month or so. Yeah. I think when you look at supply, I also showed in the charts, supply is going to be tight over the upcoming couple of years. So if demand recovers somewhat, which currently seems likely, then the market is going to be fairly tight over the upcoming couple of years. And of course, normally if you have a tight market, one would expect that the market's going to be relatively strong. And we shouldn't forget that the market has actually been very, very weak for about 10 years or so, which is also the reason why nobody earned back his cost of capital. And that's of course not a sustainable model forever. Yeah, which is probably also one of the reasons why you've seen quite low levels of investment over the last 4 or 5 years.
True. Why is it so challenging to develop a long-term contract mechanism that works for both the carrier and shippers?
I don't know. Well, I think that the main reason why it is difficult is because we haven't figured out yet how to make a balanced commitment from both sides. Yeah? Because we typically see that when rates are low, everybody wants long-term contracts, and when rates are high, everybody wants to go short. And when rates drop, if we have long-term contracts, then people try to deviate volume away from that to benefit from lower spot rates. Yeah, and I think the key to this is try to come somehow to a mechanism where we make contracts that are not just for 12 months, but maybe rather for 2 or 3 years, and also with much firmer commitments from both sides on how we deal with volume, how we deal with bunker, and those type of things. I mean, we have had a couple of examples where this works well, but admittedly those are still the exception. But I think that the key is making contracts that are beyond 1 year, yeah, but also with much clearer commitments on the one hand on capacity from the carrier, but also on volume from the customer.
I think that makes sense. So, to follow up on that, do you think index-based contracting, that was the topic back, 10 years ago, could that be something that could work with these, if you think about multi-year agreements for long-term contracts, and are carriers open for that change, do you think?
And to be honest, I'm open for anything which is a balanced agreement, and that can be based on indices or can be based on something else. I just think that we need to make sure that when we do those type of things, that we also need to have clear commitments on volume. Yeah, and in the past, I think one of the pitfalls of the index-based contracts was that when the rates were low, we were flooded with bookings, and when rates were high, yeah, people tried to find any other channel to move their cargo cheaper. And that's, I think, where both of us need to do a better job. And I think it is possible, but it requires also a little bit of a deeper relationship, and I think longer relations, because the other thing, of course, if you have longer term contracts, is that you can start working on getting more waste out of the system. Yeah, and that's another thing that everybody will benefit from.
Yeah, because it's extremely time consuming with these tenders going over. It's 3 months, 6 months for both parties. So thinking of supply chain efficiencies, I think at least that's really where you can really drive the value.
Yeah, but of course I think here we have also a little bit of a challenge in I think maybe both on the carrier but also on the customer side, is that every procurement manager in the world, yeah, wants to be better than the market, yeah, because that's how their bosses look at them, and it's just mathematically quite challenging, to have everybody do better than the market, yeah. And I think that's also why I still believe that this longer term perspective would actually help, because if you build a relationship where there is trust, then in the end you will get a market price. I mean, we also see, of course, when you look at some of the customers that we've been serving for many, many years, that in the end, on average, they always pay a market price. I mean, and it may be that 1 year it's $25 more and the other year it's $25 less, but over time you will pay a market price, and roughly the same as your competitors, which I think in the end is what you want. And also if you look at, when I started working, a container from Hong Kong to Rotterdam was 3,000 guilders at that time. Yeah. Today, the price, and we're now more than 30 years down the line, is probably lower even in absolute terms. Yeah, on average. Yeah, and I think that illustrates that the industry has actually created quite a lot of efficiencies for global supply chains, which is also one of the reasons why it has been growing so much.
Absolutely, I agree. The current trend in ocean freight digitization is instant quoting. How is Hapag-Lloyd planning to differentiate pricing between small and large shippers, and are you?
Yeah, we are. I mean, I think we were one of the first ones who came up with quick quotes in 2018, and for us it's been a really good channel that now represents about 12, 13, 40% of our overall portfolio, and it also allows us to to differentiate between large and smaller customers, because we meantime also developed a tier mechanism behind it. So dependent on in which tier you are with us, dependent on your size and your attractiveness as a customer, you will not all get the same price. If you and I would ask for the same quote, we will not necessarily get the same price out of the system. Yeah, because if you have been shipping a lot with us over the last years and I have not, I will typically get a higher price than you.
Makes sense. Rolf, thank you so much for taking the time with us and for your presentation. It's been very interesting to hear your views on the industry, and I hope that you enjoy the rest of the summit. And thank you so much for joining us.
Thank you.
Excellent.